Hey there, everybody. Thomas with Basecamp Trading. It is Friday, July 12th, and we're going to take a look here at crude oil, and we're going to talk a little bit about price action, and specifically, we're going to discuss trends and understanding the definition of a trend. Now, we're going to look at more than just crude oil because I want to show you a couple of different examples. But before we dive into this, don't forget to hit that like and subscribe button if you haven't already done so. That really helps us out, and we appreciate it. Helps us with the YouTube algorithms. So with that being said, the definition of a trend. One of the simplest ways to identify trend is by looking at pivot points. Now, all a pivot point is a turning point in the market. When the market goes down and then comes back up, that is a pivot low. If it goes up and then turns and comes back down, that's a pivot high. All right. So when we are looking at trends, it's very easy to determine a trend because an uptrend is going to move in higher high and higher low pivots. For example, we're going to go from here to here to here to here. And every time we put in a higher high, every time we put in a pivot high and every time we put in a pivot low, the low is higher than the last low and the high is higher than the last high. The exact opposite of that is a downtrend. Every time we put in a lower high and a lower low, we start downtrends. So we go high here and then lower low and lower high, then lower low, then lower high. And we put in a higher low here and break back to a higher high, and now we're back in an uptrend. So if we understand that a market is either trending up, trending down, and that's determined by higher highs and higher lows, or lower highs and lower low pivot points, then we can then throw a third category in there, and that is what we call consolidation / reversal or compression. It's anything outside of a trending environment. So when we're looking to place trades, when do we want to be trading? In a trending environment. Also, what do we want to do? Stay on the right side of the trend. So if the market is trending higher, we want to be going long. If the market's trending down, we want to be looking for shorts. So we're going to use the trend as a bias filter. All right. So keep an eye on all the different markets when you're trading and make sure you pay attention to the overall trend of the market. And that will help quite a bit, in my opinion, with increasing your win rate and increasing the profits, because if you're trading on the right side of the trend, the market should run further. So here's another example. This is Apple. All right. So this is on a 240-minute price chart. So if we start down here, we have a low. We go up and put in a high. That high is higher than the last high. We put in a higher low and then a higher high. And you can see every time we bounce and put in a pivot high and low, we're staying in an uptrend. So right now, Apple on a 240-minute basis is trending higher. It's higher highs and higher lows. If we look over here, we were trending up and then we reversed, put in lower low and lower high and lower low and lower high, and we started trending down. So once more, keep an eye out on trends. You can also use these pivot points as trailed stops if you want to stay in a market as long as the trend continues. Just trail it below the pivot low. And as long as you continue to put in higher pivot lows, you'll stay long. If you're in a downtrending market, trail it behind pivot highs. As long as it continues to put in lower highs, you'll stay short. So that's your quick tip for today. I hope it helps. Hope everyone has a great weekend. Once more, don't forget to smash that like button and hit subscribe if you haven't already done so, if you're enjoying the content. And until next time, everyone, happy trading.